Good morning, everyone. Welcome to the room. As you know, trading futures does involve risk. It's not suitable for all investors. Information in the presentation is for educational purposes, not a trade signal service, not intended to be financial advice. Hope everyone's doing well this morning. We have not much of a gap formed from our close as we open up today. Be watching the VIX this week to see if we keep creeping up. This was the kind of major swing low that we broke, and that's kind of where we returned here, 24 we'll call it. It's nice when the VIX drops down that low when it comes to hedging, because your puts end up being pretty cheap. And then when you get a spike in the VIX like that, they increase in value in addition to their directional movement. So I know there's a lot of complex option strategies, and even not that complex, just basic verticals and spreads and multiple option chains that you can build out to reduce your risk, but I just find the directional risk is so low to begin with, so long as you don't get stuck in thinking, well, I'm just going to hold this until it goes to expiration and either expires worthless and hope it might come back around. Even if you have a $200 per contract in your contract left, just close it out and put the money towards something else. So intraday, 15-minute, had a couple of shining moments towards the end of last week. Caught a 20-pointer on Friday. So we'll see if there's any momentum that gets picked up today. There's a good chance that we won't even have a 15-minute breakout set up today, because the gap is likely going to be filled here in the first 15 minutes. So we're opening near the low of yesterday. If we break yesterday's low, then we'll watch for continuation to the downside, and we'll keep a close eye on our breath. That's kind of been our trigger the last couple of Tuesdays. That's in at least for the morning session, there hasn't been much but a one-to-one breath on Tuesday morning, and it's kind of forced us to not have many trade opportunities. So last week it started to get a little better later in the session, ended up with that one 8-point winner, and then after the morning session closed, kind of coming out of lunch into the afternoon, the market rallied, and then that breath number started to turn up. So I keep an eye on it because it sort of confirms what I'm seeing visually. When I look at the chart and I think, man, there's just not a whole lot that I'm seeing. There's not a lot of great setups. And I look over to the breath and I see, oh, it's 1-to-1. Okay, that confirms that there's not a lot going on. Or if we start to swing up or down away from the close, so like here's our close from yesterday. If our breath was 1-to-1 and we started to move higher and the breath isn't changed, it's still 1-to-1, then there's a good opportunity to take a short, because we will sort of snap back or spring back towards the close. That tug of war analogy that we use. If both sides are pretty much the same strength, and for whatever reason one side starts leaning to the right, well, there's a good chance the left side is going to be able to pull it right back. If you have a strong breath, 4-to-1, 4 times as much volume is going into stocks that are moving up, well, then it's a lot easier for the market to continue in that momentum. So it's helpful to just keep glancing at the breath and watch the change. I used to have a little spreadsheet that I would mark every 15 minutes. I would just kind of chart the breadth and see, oh, okay, we went from 1.5 to 1.8 to 2 to 2.5, and then you can start to see trends a little bit easier. For those that follow or that know of Peter, Peter Rezenchek, he has a screen similar to this quad that can kind of chart the breadth for you. The in a sense, the volume change and then the advanced decline line. I don't always use this um, quad screen. I just use the little boxes, but that was something that was derived from his teachings back in the day, way back in the day. We're going back to 2006, 2005, back when Tom Sosnoff was still head of, or co-CEO, I guess, of Thinkorswim, and they had a tiny office in downtown Chicago. Um, Peter had a kind of a squawk box integrated with Thinkorswim that was educational to listen to, and yeah, you could pop into the Thinkorswim office, and I got to hang out with Tom at some of the traders expos, and that was before I was speaking at them. I got to meet Tom downtown Chicago, and then when I was asked to speak at my first traders expo, which I think was Vegas in '09, somewhere around then, um, had the pleasure of getting to know Tom a little bit, and then the other guys in the kind of clan, Don Kaufman, and there were a handful of other big minds that were a part of that. So yesterday's close, I always use the settlement close, which is this last 15-minute bar that you'll see. You'll notice that it's after the 4 p.m. Eastern. That this bar is the 4 p.m. Eastern close, but with the futures, you have this 15 minutes of settlement, and so I always use the settlement close. That's what's recorded when you look at like the settlement price. So we now have, oh, did we? 45? 45, yep. So we now have a touch of the same price as the close, so there will be no 15-minute breakout. Um, I've thought about using, I've thought about if the first 15-minute bar just trades anywhere within the last 15-minute bar to scrap it. I mean, like the whole close is close enough type mantra, but I don't have data on that. So usually towards the end of the year, I go through just kind of review all my trades, the stats in like bigger chunks and groups, and that way I can sort of make any tweaks that or look for things that stand out. Usually I don't end up making any tweaks, but with this 15-minute breakout strategy, I really only have 2.5 years of real trading data to go off of. So it's not a ton, when there's only one trade a day and sometimes zero trades. So I don't want to just take a week's worth of data and then change the whole strategy. Just trying to keep it as simple as possible, using it as an opportunity to get into a trend day if it's going to rip and we're not going to get any 50% retracement opportunities. That 15-minute breakout is a way to do that. And yeah, there's some ways I could probably optimize it a little bit more, but it's still very much net profitable, so I'm not overly concerned about getting it just perfect. I'd rather that I can execute every day, and if I take a +4 and it ended up going +20 and I missed out, okay, not Not ideal, but at least I walk away with something. And so now that I have, you know, when I get later in this year, I'll be able to go through and get some more, I guess, clearer insights on that plus 4, plus 20. I have kind of switched back or doing away with the plus 4, if you will, just based on the year thus far. But the more data you have, the better. And that's also why you need to give yourself time. It can be difficult if you put yourself in a situation. I'm going to switch to the 5 minutes since I won't be taking the 15-minute breakout. You need to give yourself time to be able to accumulate trades. And if you say, okay, I'm going to quit my job at the end of the month and trade full time, that'd be like saying, okay, I'm going to quit my job at the end of the month and become a doctor. Or, okay, at the end of this year, I got 3 months. I'm going to learn how to, you know, become a lawyer, and I'm going to quit my job and be a lawyer at the end of the year. Well, yeah, you might be able to read a bunch up on how to be a lawyer, but you need that experience, whether it's in the courtroom or whatever type of specialty you're going to go into. You don't just want to be a generalist lawyer, and then you'll spend all this time learning and learning and learning. Even that in itself is going to take years. Noticing, we rallied and filled the gap in the first 5 minutes, and then we've sort of drifted down um, to the 50%, came down, broke it, and now we're sort of bouncing a little bit. So yesterday we saw 50% shorts. We had 3 of them in a row, and they all, except for the last one, broke the 61.8 and then rolled over. So those kind of little nuances, like, oh, okay, is this going to be a fake out and are we going to go screaming into new highs, or is it indeed a break of the 61.8? Those are things I look at in the first 15 minutes to get a sense of, okay, what might we be able to expect as we go into the day. Our breath has gotten stronger. I have this volume on the chart. Really, the only reason I use that, or I have it there, is so that when I go to the overnight session, if I want to see, okay, what did we do overnight? Okay, yesterday we had a big, or kind of a big V where we sold off and then we rallied, and we basically are flat. But I can easily see, okay, here is yesterday's trading session, the trading hours only, because the volume is just so much higher, and overnight it's basically non-existent. So if I'm looking at a bigger chunk of time, it's just an easier way for me to see, okay, here's the trading hours session, here's the overnight session. Trading hours session, overnight session. That's the only reason I keep volume on there. When I was referring to that plus 4, about the 15-minute breakout, I use a -4 stop, a 4-point stop. And what I was doing as of February, mid-February of this year, I started moving my stop to plus 4 points when the market went plus 10 points. Because we were getting these really fast moves, and you go screaming up and then you go screaming back down sometimes. And so I didn't want to just let it turn around and stop me out after it went 10 points in my favor. So I started moving my stop to plus 4, and that worked. It definitely helped eliminate some stop outs, but as volatility slowed, I was still getting the plus 20s. Even if I moved my stop to plus 4, the 20-point targets were still, like, market went plus 10 and then it went 12, 15, 20. Like, it still got there even if I was moving my stop. But the losers, the times where it went plus 10 and then rolled over, I was getting out for 4 points instead of -4 points. So it did save me some losses in there. But then as volatility slowed or came down since maybe really the whole summer, I would say I've got one, two, three, four instances where 5 instances where well, I guess four. We'll call it 4 instances where the market went it came down below that +4 and I got taken out for a 4-point profit, and then slowly and surely it turned and made its way back up to +20. So, you know, a +20 is considerably more than +4. And I did, yeah, I looked at just moving it to break even, 0. Um, and, these last 4 trades over the summer, um, some of them came right down to that break even point and then turned. So, I'm just leaving it alone. -4 stop, +20 target, walk away is basically what you could do. And then whichever one hits, it's just a statistical game at that point. About as simple as you can get. So that's what I've been doing. All right, so we are at our 15-minute mark. Breadth and advanced decline line basically right where they were when we opened, and we're pretty close to where we opened. It's still being in the month of August. I'm always still a little bit leery and try to be extra conservative, I guess. Yesterday um, just had that one short setup and just kind of called it just because, just to kind of keep that momentum going. I had a stop out, well, last Tuesday. First trade was a stop out, and then we had the winner. Um, and so in a situation where I might continue to trade, we're down at yesterday's low here, getting this bounce. Not an extreme low tick, but it is our low tick for the day. Didn't really have time to draw this 50% long up, and we touched the short first anyway, so the long would be sort of secondary. But we are a double bottom off of yesterday's low. Yeah, we had 6:45 or 15 minutes here after the bell, and then at 10 is new home sales. So those are the two news announcements for the day. Let's take a peek at those. Part of the August wackiness, I guess, is probably due to my own schedule. Usually I have a few more holes in August and do a little more traveling. Um, and so sometimes just getting back in that groove can take a couple days, and then you're going into another trip or something, or a long weekend, and then you're already out of the groove. So, but by and large, going back since I started trading, August has been the most challenging month for me. And other colleague traders said the same. Also looking back to like Monday's open and how we traded, what sort of patterns were we seeing? A lot of times that kind of stuff will carry over. Like we talk about the crossover trade. Um, this might be a good instance to give it a try. It would be a 4140. Let's see what we get. 4140 and we're really going up now. No, probably not going to have anything there. Almost back up to highs. $41.41 is even higher, man. Yeah, no crossover, nothing there. Getting too big, and then you get this little pullback, and then we're already basically at highs of the day with a high tick. So that's where leaning on these nicey ticks. It's like, okay, we are up in a high tick, and even just on this little red bar, like we barely pulled back. So you don't want to be getting long when the market's in high ticks. You don't want to be getting short if the market's down low ticks. And like that happens a lot where I'm drawing up a setup. Okay, here's a potential opportunity, and then it either gets too big or doesn't pull back, and then it's like, okay, there's no setup. So even though I might only take one trade, it might take me 4 or 5 or 6 drawings to get to that one trade. We start down at lows here. We have that low ticket lows, 43, or I guess not 43. Looked like we did at the time. Nope. So no low ticket lows. Made it up to the negative 61.8 there. This little retracement here, same thing, up beyond its negative 23. So now we're just up in these little extensions, but I don't like taking little micro extensions. They're so small, and by definition, the market's extended. So yeah, if you're using a different platform, sometimes the tick feed data can be a little different. If you're on Thinkorswim, it should be um, the data should be the same. If you copy the tick range code, you come in here to studies and then settings, so edit studies. And then if you click on tick range code, the settings wheel, you can turn on or off a few different things. But the only thing you should really have to change, if you make it a 1 minute bar chart, I do have this 1 period moving average, which you don't really need. But a 1 minute bar chart should get your chart looking pretty close to this. And then I have a 0 line and a plus and a minus 1,000 as those dotted lines. That's really the only edits that I make. I'm going to mark the halfway back for the whole day yesterday. Fifty, 51. So again, a high tick is 50. Then we made a higher price is 51. So this is not a high tick at highs. Not really a double top either, just kind of up in limbo. So easily could just push up to this 41.56. There's not really any resistance to the left. Um, this cluster, not really cluster, but these red bars, just kind of each bar makes a higher high. There's not really a consolidation like there is up here, and even Back here, you have a red bar down and a green bar up. You don't really have a consolidation or a lot of overlap moving sideways horizontally until we get between the 50 and the 61.8. So that's why not likely to stop. Yeah, and already made a new high here. Not likely to just stop, and this short not as enticing. You don't have a high ticket highs. You're not quite at resistance yet, so that you don't want to jump in too early. And look at our breadth is up at 3 to 1. We're higher than the open, so we've had strength from the open, and the market is higher, so it's sort of that is moving in conjunction. You don't have a divergence where the market went up but breadth went down. So I'm going to give it here till this new home sales 5 minutes and see what kind of reaction we get. Trading in a lot of ways is a deep reflection of how much grit and perseverance people have. If you think of New Year's resolutions and how many people make these grandioso plans, and then, by week 2, they already quit their weight loss plan, their no drinking, smoking, whatever their plan they came up with or their idea. Um, and a lot of people quick are looking for a quick win or a quick fix. Um, with trading, it's kind of the same way. You go in these really screaming bull markets, and everybody jumps in and is a professional, or everyone's a trader and wants to quit their job, and then um, don't really spend the time to actually learn and understand what it is they're doing and what's working and why. And then the market starts to get a little volatile, and they all get shaken out, and then they give up and lose what they made, and then more. And so you kind of have to go into it with a long game. I mean, really anything, whether you're going to be a, you know, higher education type career, or you want to be a tradesman, or just, you want to mow your lawn. You do it once. The very first time when you're a 12-year-old kid, probably doesn't look that great. But after 3, 4, 5 times, couple summers, all of a sudden you get used to it. You understand, okay, if I hit rocks, it's going to dull the blade. Okay, this is how you sharpen a blade. This is how you do all the different things that go along with it. Something as simple as mowing the lawn can, almost become an art in some ways. So if you can set yourself up to take the pressure of, okay, I have to be trading full time and quit my job in the next 3 months, if you can somehow remove that pressure, that even just by like, okay, yeah, I really would like to quit my job and trade full time. That's a fine goal to have, but just maybe uh, think of it like a dimmer switch where you're dimming your 9 to 5 job and maybe working a little bit less, or offloading some responsibilities maybe, or hiring more people if you're a business owner to take over some of your responsibilities so you can have I mean, it's only an hour and a half in the morning to be able to trade, hour and a half, 2 hours. Um, you could easily keep doing what you're doing, scale back a little bit, just so you have that chunk of time to be able to trade. And that way you don't feel like, okay, I have to make, $1,000 today and tomorrow and the next day, and that's my goal for every single day. Otherwise, I can't pay the mortgage, or I have to go back to work. And then you start adding those pressures on you. Whereas, you know, I think for me, being in a situation where I was trading as a young person in college, and then coming out of college, I mean, you can keep living like a college kid with very little expenses. You're not already tied to a family, uh, mortgage, all these other obligations and responsibilities. If you were coming to trading or a career change or starting a new business at age 50, there are going to be more challenges and hurdles. So okay, here is a move above the swing high off of the 50% long. So the long is a 41.46. And we broke the opposing short already, so that's good. See if we can get a 41.46 long. Nope. This is about as high as I'd be willing to go. 46.75. Otherwise, we're getting too close to double top territory. I guess we can move it up once more. 47. 41.47. And it's a little on the high side. I would like this swing high would have been a little better, but we'll see if it gives us anything. You don't want the move to break the opposing 61.8 by too much, because then you're coming up here and you're basically at a double top, and then you can get a lot of selling pressure. But no, nope, nothing there. Yeah, I was afraid of that. Oh well, it's worth a shot. Yeah, I'd probably come down and retest this 50 um, at the halfway back. And that's the same way with like low ticks at lows. If you can get in on a very small retracement, go for it. But if it starts to get too big and we get too far off of lows, then you kind of lose your edge, if you will, the benefit of being able to jump in um, early. So marker high and low of the first 30-minute range. For people, if you are the kind of person who has had a lot of success over the years with, you know, the more you work, the more you make kind of a um, attitude, I guess, or just drive. You set these big lofty goals and you get, all these um, sales clients, especially like, yeah, if you're a salesman or in real estate or some of those kind of professions where um, volume of phone calls and, if I can just get 2% of deals to close, the more phone calls I make and people I see, then that 2% can grow. Um, Trading at first, a lot of time in front of the screen is really helpful, but then if you sit here and sit here and sit here and trade, uh, it can be more detrimental. I was probably so I started swing trading, as most of you know, first. I wasn't day trading, and pretty similar approach um, to what I do with day trading, but simple swing trading. Was only looking at the charts at the close and making my decisions based off of that those daily candles. And I might take another shot at this if it doesn't stop at this opposing short. Very well likely will though. If it breaks, it'll be push up to here. Um, so it was probably 2 years of swing trading and had a pretty solid, um, you know, I guess track record for that 2 years. Felt consistent, was felt in control. Which, if you've been trading for a little while, you probably understand that term, I guess. And then so now, yeah, we're basically at that next retracement short, but I'll move this up to the high. So it's the full halfway back and kind of ignore those. So I'll come back to that thought here in just a minute. 75 and 46. It'd be a 41, 44, 50. It's a little risky because we're right at the opposing short here. I don't like to keep repeating the same trade, 44.50, but give it a shot. I don't know why I feel a little less conservative today, but maybe because of yesterday's starting off on the right foot, I guess. If we can at least get a first target, that would be good. There we go. Okay. So first target. Move my stop up here. 40. Well, break even. Go up a little higher. I'm going to really move it up now. Use this swing low here. Swing low to swing high. I just go 48. Just keep it simple. And I liked that the breadth and especially the advanced decline line had gotten stronger. That's why I kind of put more weight on the halfway back at the day. That down here touched first. And yeah, we had a little bit of opposition from the opposing. There'd be a lot of cases where I wouldn't. I would pass on the trade, but you had the first one come straight down, and that can kind of shake a lot of people out. Well, obviously, it shook me out. And so then the next time it goes up, sometimes it goes up with very few participants. Let's go up to a 48, 48, what is that? 49.50. 41.49.50. Move the stop up. So kind of going back to yesterday's video, the context. I like to keep my stop tight up here because we're up at the top of the 30-minute range. Let's go to a 51. 41.51. And that way, if we roll over here, we're going to get taken out right away. Bring it up again. Well, I just leave 41.51 is where the stop is. You could use the swing lows. At this point, I like having the 61.8 here because that would be a break of a 61.8 at highs. Look at here would be a double top. Okay, we just broke above. But if you kind of think, if I wasn't in a trade, what would need to happen for me to trigger a change in direction? Um, 53. It's already above where my anchor point is. 41.53. Let me adjust this. See, most people don't have any sort of idea what they're going to do if the trade goes in their favor. And that's why I think people were up at this halfway back short from yesterday. That's this yellow line. This is the halfway back of the day from yesterday. I think a lot of people just, that's why they end up getting out trades so early because they just panic and, oh, I better flatten and get out. They don't have any idea what they're going to do if it goes their way. 53 still. And then you spend all the time waiting for a good setup. 53.50. You spend all that time waiting for a good setup, and then you get it, and if you don't know what you're gonna do, then yeah, you just, oh, I'm up 4 points. This is a big trade. I gotta get out. So don't do that. Have a plan. Okay, we're getting kind of high. This is gonna be real tight and likely kick us out if I move my stop up here, but it would be, I'll go 56. That moves it up almost 3 points. 41. Oh, 56. Too many lines here. It's so methodical. Just draw the next retracement. Draw the next retracement. Okay, 57. 41, 57. There we go. And it's actually a little bit higher. Doesn't have to be perfect. Just 41.57. Where did we start? 41.47. So this trail stop is at 10 points. Oh, what was that? I wanted to see where the negative 23% target was. First, I'll move it up. 47.50. I'm sorry, 57.50. And the negative 23 is, oh yeah, we're already beyond that here. So it might kick us out here. 41.57.50 is where my stop is. And we almost broke. We came right to the 61.8 of yesterday's full halfway back. I didn't take any puts off at the open. I put them on Friday's close. Took a few off yesterday at the close just to kind of solidify a winning trade, reduce the risk, lock in some profit. If we close bullish today, I'd probably think about closing them out. If we close bullish but we're below yesterday's high, I would hang on. See if we get taken out here. That was a pretty nice run up. Did we get a high tick? 710, 711. Nope. Our high price is after our nicey tick high, so that means we could continue to make new highs. Breadth and advanced decline line have continued to strengthen, so I'm happy with a 57 or 50, yeah, 57.50 here as the stop. You could go up to 58.50, but at this point, because you have a double top here, put it right underneath the swing low. But at this point, what's a point on a 10-point trade? Yeah, I could throw the overnight high. As Tim pointed out, that was a 57 back here. I could put that on the chart, but I'm going to get rid of the full halfway back just for a minute. We know it's at the negative, or at the 61.8, and we can back up here and review. Because things move a little bit quickly sometimes, especially when I end up trailing each candle. If we really get screaming, I mean, rarely do I get it perfect under each candle. I just do my best, and it's especially hard when you got two mouses because I got two computers. But that's why if you keep your trade setup, your screen, your trade ladder simple, then there's a lot less room for error. Your eyes are used to looking at certain places, and your fingers, clicking certain areas. So keep it simple. I bet this gets us taken out here. So you say, okay, if I wanted to go short, what would the 61.8 break need to be? Well, it's a 58.13, so you round down, subtract 2 ticks, 57.50. Okay, well, hey, that's where the stop is. So that's how you get to the stop placement. That was a quick run up. This is a 5-minute bar. Look at that. That was nice. Take a breath. Now imagine doing that with one contract. That's what I tell everyone or anyone who asks. I encourage people to trade. It's better to trade multiple contracts using the minis or the micros rather, so you can get used to that, and then don't start trading the minis until you are comfortable enough and have at least put 5 grand in account, just so you have enough to trade two contracts and have some wiggle room. If you had one contract, you'd be stuck thinking, okay, I've got one exit point. Oh, should I just get out here? Should I get out here? Should I trail my stop? And it's a mind battle. But you don't want to fall in the other trap of saying, well, I've got $100,000 in my account. I'm trading 10 contracts. Oh, I'm going to take one off down here. Oh, I'm going to take another one off. I'm going to take another one off. I'm going to take another one off. Like, you still want to take half off at the first target and then trail the second half and try to stay in those, keep those contracts as long as you can, as long as it's going your way. Because when you start looking at what was my total risk on my initial stop compared to my P&L, if I risked 4 points, if I had two contracts and I risked 4 points, and then on the second or on the first contract, if I take off 3 points for a first target, and then I get out for a point on the second contract, well, that's only 1-to-1. So it's great. I made 4 points, and it might feel good, but come back to the numbers. Okay, it's 1-to-1. I want to get upwards of 2-to-1, kind of shooting for 2.5 to 3 to 1. Usually my average ends up being closer to 2.5. And there we go. All right, so 41, 57, 50. That was a good one. I'm going to take a minute here versus just jumping in short. Let's take a bigger assessment. Let's draw up the next full halfway back, and then we'll go back and review this trade. But top of the 30-minute range is coming below us. This would be now our next, or like the bigger short. I do like that the 5-minute candle, like the two anchor points that I have, one anchor point is on the first candle, and then the next anchor point low is on the second candle. We don't have a high ticket highs, and we're sort of close, or a point and a quarter away from the top of the 30-minute range. I lean more towards longs today than shorts, especially without high ticket highs. So I'm going to draw this up, but I don't have an order here. May end up going into a kind of a bull flag sideways. Let's take a little breather. I'm going to go back and I can review this long setup, and then we'll push on forward. $44.50 was the yeah, that was a big one. Okay, and there was something else I was supposed to keep talking about that I forgot. So, oh, when I started trading. Yeah, so I did 2 years swing trading, and then I thought, well, okay, if I'm going to do this full time, I'm going to have, like, what am I going to do during the day? Like, so my thought process, I have this 50% short drawn up, but I don't have an order there. The negative 23 does line up nice with the top of the 30, but I'm just going to take a brief pause here. My objective coming out of college was to create a lifestyle where I could have the flexibility to be able to train and race and ride my bike. Kind of started seeing a little bit of potential there in uh, being able to do some pro level racing, and I figured, well, if I wait till I'm 45, 55, 65 and quote unquote retire, I'm going to be too old to be, racing at that level. So, okay, what kind of lifestyle could I create around, or what kind of career could I create around my lifestyle versus, oh, go work a corporate job and, yeah, make a bunch of money, but, maybe be miserable, and certainly wasn't really for me. So I'd been trading, I'd been in kind of a business design track through college out here at ASU in Tempe, Arizona, and then decided to I had a pretty good momentum going with my trading, and it'd been going through. So then we're talking like 2008, 2000. I think that was about when I started adding in some day trading. 2008 and then 2009, it did a lot more of it, and it probably took a good year and a half to get the day trading going. That was a lot more challenging, even though I had already had the experience of swing trading. Day trading did take a lot longer to feel like I had control over. And then it was probably 2000 and late 2009, early 2010 where things really started to rip and or get going with my day trading. And we were, I say we, my friend Justin and I were pretty close, and I'd moved back to north of Chicago, but had a lot of access to good trade, or had access to some really good traders, a couple in particular who kind of helped us along. And then we, yeah, got going on the day trading and was doing both swing and day trading. And I kind of, through college, I was working at an electrical engineering firm doing CAD drafting, and we kind of, I kind of phased that out, if you will, as I was trading more. So then by the time I was graduated, um, I did do an intern or I went and worked for a financial advisor who was sort of a semi friend of mine, or a friend of a friend, I guess. Um, and that was flexible enough where I could. It was basically a mentorship. I mean, I learned so much from Brad. You know, not just about business, but life, parenting, all sorts of great stuff. That was the best um, opportunity I probably have had in an opportunity to get paid to be able to trade and learn all these amazing life lessons when you're a early 20 something kid. That was great. So um, I kind of had like fallbacks that would take off the pressure of having to trade, and that really I feel like made a big difference. I also didn't have many expenses. Lived with a couple roommates in Madison, Wisconsin, in a um, not super run down, but an old house that we actually helped the landlord fix up because I was good at that kind of stuff, and she would knock some money off our rent, and I enjoyed fixing things and working on old houses. So, and then I started buying houses and doing projects like that with my dad more, um, and trading, and then it was just trading. So getting kind of in this bull flag scenario up here where the short broke here and then the long broke, so I'm just kind of sitting out. Let's go back to that last trade, yeah, because things go fast when they go. All right, so the first I had the um, this long drawn up at 47, and there was nothing there that ended up stopping me out pretty quick. I would have liked it if the swing high was a little bit lower here. We did break the opposing, but um, then we started getting a little high. And when you do that, when you're only a point and a half, 2 points away from the high of the day, you have a better chance of falling back down and retesting the halfway back because it's close enough to get some sellers to come in, and then you risk that kind of a situation. Not always, but today was the case. I guess yesterday morning was a good instance where we did not, let me go back, fall down that kind of a move. Yesterday was a short, but um, it didn't retest the 50. It ended up bouncing. And then the second one, so I drew up a little, first I drew up a little short like that. Um, and then I had adjusted it to the high point here, back to here. So that would technically be the full halfway back short, the opposing, but the halfway back long was already in play. That's this 41.42 down here. And so we have a big halfway back of the day. We had a pretty bullish breadth advanced decline line and a double bottom at that big halfway back. We did break the swing high. These little clusters of swing highs, and we're talking 512 tick chart. Um, that's really all you need. Just a little move up and down, boom, you get a swing high. And so just jumping in on the retracement here did have a little opposition with the halfway back short, but I figured if this thing's gonna rip, well, I guess you could have got a little crossover like that. But I was thinking if this thing was going to rip up, it would probably go in a hurry. And you had the halfway back long already engaged, broke the swing high. Um, we already filled the gap for the day, and so I just went for it there at 44.50, and then just trailing each. Ended up with a lot of micros actually, trailing each one on the way up. So you could have waited for a little bit higher break of this opposing and then just taken the crossover. That would have been fine. You still end up with, 3/4 of the same profit. Um, Even waiting for a break of the top of the 30-minute range would have been fine. Um, I guess from there we didn't make a full pullback on the next retracement, but yeah, trying to get in early when things are not as clear is a good approach. If it's so clear, like if you get up here and you're like, oh, yeah, we're in an uptrend, okay, well, it's a little bit too late to be jumping in. Like if you drew this as a long, it's like, okay, yeah, maybe you get a first target, but doesn't really help you much when you roll over right after that. So the context around what's the breadth and advanced decline line doing, especially the AD line here. We were really, we started in the 300 plus 300 at the open, and then we were already up at 1,000. So that was a pretty good move up. The breadth was continuing higher, and I figured the other influence on a trade like this is, okay, if I have two stop outs today, I'm still positive on the week because of yesterday's winner. So as much as I don't want to let that influence my day-to-day trading, it does certainly, I do think about it. And I sometimes play the, P&L game of, okay, it's Friday and it's been a kind of a scratch week and I'm plus 4 points on the week. So if I take this trade, let's just say, if I take this trade and have a 4 point loss, then I'm back to break even. If I'm up, 50 points on the week and a stop out is going to knock me down 10 points, then I may lean on taking it because I've still got quite a bit of wiggle room. I still want the trade to be a good trade and look like it's got some potential, but my risk tolerance can vary slightly. I still tend to be more on the conservative side, but now we're at the full halfway back of the day, just underneath the 30-minute range, but 30-minute high. So see, this is where, okay, the 50%, here's the swing high. So you might as well wait for the 61.8 to break in that case because it's so close to the 50% short. The swing high and the 50% are like right on top of each other, and so is the 61.8. So we can draw it up like that. Go a little bit higher. I wish the Thinkorswim platform was just a little bit lighter. Over the years, there's so much in here that it does take up a lot of resources and can be a little sluggish at times. I liked it when we were down here. Now that we've come up and touched the 30-minute high, I don't like it as much. Because now full halfway back opposing. The other thing about context is the time of day. So no, I don't have an order here just yet. You know, being early in the day, this was the first 50% long back here um, at 7:05. And so that's pretty early in the day. We have lots of time for us to rip and then even change direction and rip in the other direction, or sell off. Whereas now we're an hour in, there's a lot more visually that's transpired already. We do know now we're at the full halfway back short of the day of yesterday. So there's a lot of variables that in and of themselves can look the same, but when you take the context of the things that surround it, that's when the decision, do I take it or do I not, can change. So a double bottom, a break of a little swing high, those are all good long setups. But then where are they occurring? Okay, if it's occurring at a 50% long, halfway back of the day, okay, that's a good spot. How long has the uptrend been in play? Like at this point, you would say, oh wow, this uptrend is really clear. We've had a bullish, the candle hasn't closed, but we've basically taken back what we had in the last candle. This is really clear. So everyone and their brother is going to be drawing up a retracement here and looking at getting in. Meanwhile, you probably won't have as strong of hold there because the move is sort of already shaken itself out. So I won't do a little long there. Also, the size of the 50%. This is basically the yesterday's high to low. That's going to have a little more weight than, you know, a little retracement that only lasted 3 minutes on a 512 tick chart for as far as support and resistance goes. You see how it went straight up and then it's coming straight back down. And that's kind of what bit me earlier with that right here. Wasn't quite as straight up, but kind of close to straight up, and then came straight back down, and that's where I was stopped out of that first long. So even as the day goes on, sometimes I'll take a trade, and it's like you get a better feel for how the market's reacting when you're actually in a trade, or I get stopped out on a trade, and then I can adjust my um, decision-making process going forward based on that trade. So it's not like I'm going into it saying, oh, I'm just going to try to take the stop out to get information, but by actually putting the trade on, it does become a helpful way to gain some insight on the day, if you will. Now getting very ping pong between these two 50s. Today's 50% long and yesterday's 50% short. So probably going to have to sit tight through this.
I also don't like the crossover later in the day. So when I say crossover, I just mean taking a micro, taking a small retracement. I'll say this and then this one will probably work out, but taking a small retracement where like the halfway back of the day right now is a long. And if I were to take a short that crossed over that 50 and 61/8, so if I took from the swing high down to the swing low like that, that would be a crossover. If you get too late in the day, what ends up happening is you're basically right in the middle of the day's range. You're in between the 30-minute high and the 30-minute low. Whereas if it's early in the day, we don't really have a big enough range established yet. So again, that context of where are we in the daily, uh, the time frame of the day also comes into play, and there are a lot of nuances that make it difficult. Like those are hard to quantify, um, and so that's where like the case studies, learning by case studies, if you will, like a lot of law students do, that comes into play a lot with trading, and just that repetition of observations is really what's needed to get a good understanding before you can really feel comfortable. See, not really a short move there. I had a couple people reach out, just chatting about scheduling a one-on-one session. Happy to do that. We're realistically looking into September, so happy to chat with you if you wanted to sit down and review anything, or just kind of go over trades, or um, touch up on anything, or have a little bit of accountability. Um, Feel free to shoot me a note and we can get you on the schedule. This kind of the end of August into the that first week or week and a half of September are always a little bit hectic for me. I go back up to Spearfish for a race, and then it's back to Arizona, so a little bit of back and forth travel there. Um, it kind of breaks up the end of the month and start of the month. But keep your eye on that September 15th, 14, 15, I think is the next Fed meeting. 13, 14. Um, that should be the next jolt to kick things off with another most likely rate hike, and then you probably see a lot more volume and trade activity coming hitting the markets. I still think if the Fed did something like decided to only raise rates by a quarter% or even keep them unchanged, because what they're doing is buying time for the supply chains to sort themselves out. I mean, you are seeing a lot more container ships and stuff hitting the U.S. and a lot of these products making it to store shelves. But so it's like, well, how much is directly impacted from the rise in interest rates versus just time for the supply chains to catch up? Then you're running into situations where there's too much inventory, which pretty easy to see that coming. Um, so on the one hand, retailers probably will buy a lot less or have bought a lot less going into this time of year in preparation for the holidays. On the downside is what they bought that they have extra of going to be what people want at the holidays. So cost of goods and new purchases, depending on if they have what their terms are for repayment, they're probably not buying as much right now. But as you kind of saw with Target and Walmart, what people are buying has changed. So the stuff that they do have a lot of extra of ends up being discounted, and so it still kind of hurts the bottom line. But there's definitely a lot of there's so many variables that you can't say for certain that raising the interest rates have curbed inflation or slowed or been the sole factor that has reduced inflation. Going 5 years ahead and looking back. But it's interesting because you have some countries that are keeping interest rates low and even lowering interest rates. So to see those, two compared side by side. Oh, let's see here. Why does it look like my charts are moving? I'm gonna turn off the screen and turn it back on here. Try that. All right, see if they're still frozen. Yeah, it'd be interesting to see side by side, countries that lowered interest rates versus raised interest rates. The time to raise interest rates is when things are good and you can fly under the radar. And oh, hey, I'm getting a little more on my savings account, and interest rates are just kind of ticking up, ticking up. Oh yeah, things are costing a little bit more, but I'm doing well. I gotta, still have a job, making good money, getting raises, all that kind of stuff. The typical um, Americans' life, if you will. and then that stuff can fly under the radar. But now it's very difficult to have a near-term impact with something so big as raising interest rates like that. But as long as people have jobs and opportunity for work and income, then the economy made up of the people that are in it, spending, working and spending, should chug along just fine. Technically, we're in a recession, and most folks probably have not experienced that. And then on the other hand, you've had folks that have been in, uh, you know, despair, desperate times since the start of COVID, and to them, they've been in a recession since 2020. And so there is a big disconnect between what the technical definition of a receding GDP recession means or how it impacts, different groups of people. So, yeah, I would be all in favor for um, helping out those groups. And, I'm not so concerned with needing help from the government or whatnot for myself and my peers. I mean, it's really not going to change our life whether interest rates are what they are. It's like, well, if you're paying cash anyways, who cares? But for a new home buyer or someone who makes a lot less money, yeah, being able to have affordable rent or purchase a house, that's what the interest rates are hurting. So I think there will be a lot of volatility going into the fall. If we go out, let's just go out to a monthly chart briefly. Kind of decided I'm done for the day here. Um, the full halfway back, we came close to it, but not quite there. I think, every economic forecaster or Wall Street guru or whatever, wants to pick a bottom or whatnot. But between the Russia-Ukraine war and going into the winter, which is actually things are looking better, um, I guess depending on who you ask. But exporting wheat was a uh, big hurdle. So hopefully that can keep going and get a little bit of stimulation to their economy and keep Ukraine going. But then you also have this China-Taiwan stuff, which, again, depending on who you ask, the Taiwan people would tell you, oh, we're not worried at all. China would even tell you that, we're not a threat, don't worry about us. So I'm less concerned, actually, than I was going back a year and a half ago. So, but some of those things, it's always those curveballs. You think before COVID, things were hunky dory, and all of a sudden, pow, you're hit with this COVID, and bam, market sells off. Huge opportunity, but it's hard to see that at the time unless you've been doing this for a long time and you kind of think in that investment opportunity mindset, and you have the means because you've lived within your means and you're not overextended with a ton of debt and all these things that end up just clouding your judgment. So, do I think we hit a bottom? Nah, does it really matter? If we go down and touch this 50% here in the fall, uh, I mean, from a day trading perspective, it'd probably be better if volatility kicked up and we sold off and broke the lows, and then we had opportunities to, buy up, add to our long-term position. We'd have opportunities to buy puts. So, sure, market go down. I mean, it we'd probably make more money if the market went down, um, but it doesn't really matter. The Fed meeting announcement in September, though, does kick off, like, you get through that, and then it's kind of full gas into the Christmas holiday season. So yeah, fall is a good time to be trading, and we should see more volume, more activity, probably more volatility, because if the market goes back to all-time highs, then the Fed is left saying, well, that's not what we wanted to happen. So we just punished all the low-income people who want to be buying houses, and I suppose developers and those folks who are trying to build houses and apartment buildings to help the problem of low supply on houses. But then we've also, just got the people who do own stocks and investments. We've made their net worth go up. Businesses' net worth goes up, which, if big corporations have more money, they can invest more in their company, hire more people, which are typically lower income jobs or middle income jobs. So there are benefits for companies to make more money, to be able to hire more people, and then those people can feed their families. So yeah, lots going on this fall. Should be good. Yeah, low ticket lows, but we're not at the low tick of the day. So um, buying a retracement off of low tick of lows is fine if there's some type of support or reason to do that. The halfway back short that didn't really trade is kind of at its negative 23, but I wouldn't just buy this here as a long because we had a low tick, because look back here, we had a low tick at lows. Back here, or we had a low tick rather, not at lows of the day, but at a temporarily it was a low price. Here we had one, here we had one, so you can keep going back and finding that same scenario. So if this was the low price of the day, or if we had come down to the bottom of the 30-minute range, like if you're going to stick around and trade longer than the first hour and a half, really the only place I'd be looking for a trade would be a bounce off of this bottom, so the lows of the day, or if we broke lows, um, maybe a bounce back to the underside of the 30-minute low. But that's really it. And like I said, I'm going to be done for the day here, but wouldn't be trading in the middle of the range, wouldn't be trying to dabble up here around highs because you're bumping your head up against the halfway back short from yesterday. So, yeah, that theme of context that I talked about in yesterday's video really coming into play today, and yeah, good questions that have kind of gone along with that same theme. I would, yeah, definitely encourage you to go back and watch this recording and other weeks. You can do that in the dashboard down under the trading sessions uh, heading, maybe halfway down, and you can watch all the past recordings. I've just started, I don't know why I didn't think of this earlier, but putting the kind of timestamp of when I took trades in the description for those uh, live trading session recordings so that you can go back and, okay, 32 minutes in was the first trade, and it's a little bit easier to reference, and you don't have to sit there and watch the whole session if you don't want to. So that usually takes an hour or so to upload and post, but that'll be in the dashboard as well as the weekly market analysis and trade recaps are all there as well within the member dashboard. So if you have questions or want me to look at a chart, or if you want to sit down and do a kind of a virtual one-on-one meeting, happy to do so. Just shoot me an email, tim@eminimind.com, and I hope everyone has a great rest of your day, and I'll talk to you all soon.